All right, welcome back. We got a sunny Sunday Tesla update video for you guys. This past week we had Tesla's earnings come out, and the numbers they missed, they weren't great, they weren't terrible, but the market didn't like the numbers. So we'll get into a little bit of that, and we'll go over our thesis for Tesla. This is the first stock I ever purchased. This is my largest position. And so it doesn't feel good when it goes down, but I understand why it's going down. So they've missed the last two earnings. They've missed their numbers, which isn't good. You don't want them to miss numbers. But again, we're in a weird time with rates, and they're raising prices, cutting prices. Factories are down. There's a lot of moving parts. So the fact that they're missing is not good. It's not an excuse. They should hit their numbers, but it is understandable. Automotive companies are very cyclical, and it goes ebbs and flows with the economy. So their numbers this quarter were reported 25.16 billion for the quarter. And again, their gross margin went down again, which isn't good, meaning for every car they sell, their profit is getting smaller and smaller. They still have the highest margin of any automotive company out there. So I think what we're going to continue to see here, if we pull up our bull and bear case, where are we at? So the pros and the cons. I went in here and I kind of highlighted things that are going good. We made this a long time ago. So the things that are green, those are still intact. The things that are red, those need to be improved. So Elon and the team, all that's the same. One thing I will say is they did lose their CFO last year, and he was always on the earnings call. I always thought he did a good job, and I think the earnings calls are suffering because of that. The new guy hasn't quite got a flow on how to deal with Elon and the investor questions and things like that. But it's just a call. That's not the end of the world. Manufacturing, they still head and shoulders over everybody. When it comes to energy, they're doing really good on the energy storage, the batteries, the supercharger. That's doing great. But solar's still in the toilet, and that's bad news for Enphase because Tesla solar is still going down, so we have not bottomed out there. And we've talked about it in other videos. That's very interest rate sensitive. Government cheese, a lot of that Inflation Reduction Act, all those stimulus bills that went through for green energy, a lot of that's going for Tesla and their supercharger network, so that's still there. And the supercharger network, it's great, it's incredible. More people are joining all that stuff. There are chargers all over the place, so all that's looking good. When it comes to AI, their self-driving is still really, really good, head and shoulders over everybody. I don't have in here the robot. I just count that in AI. So that's all looking good. Nothing's changed there. When it comes to the DOJO Computer, 2 earnings calls in a row where they don't seem to be talking too much about it, which is telling me that they're not making a lot of progress, and it wouldn't surprise me if they just scrapped the whole thing down the road, which is a little disappointing because that seemed like it could be a competitor to an NVIDIA, but it seems like they're complacent on just buying a bunch of NVIDIA chips instead of making their own. So we'll see. Elon did say that Dojo is a high risk, high reward, low probability outcome is kind of what he was saying. If it works, it's great. It's going to be a huge game changer. If it doesn't, we're just going to keep buying NVIDIA chips is my guess. Over the air updates, let's just take that off. That's not that big of a deal. When it comes to the cons, it's an interest rate sensitive stock. To buy a car, most people finance that. So if the cost to borrow is higher, they might sell less cars, or they may have to cut the price of the cars so their margin shrinks. So this is really interesting because Tesla's been around since 2010 or so. So in its existence, and this goes with a lot of companies, money's been very cheap for a long time. So these companies are having to face the reality of what is it like when we have normal rates? Because right now we don't have high interest rates, we have normal rates. Now they've gone up 500% last year, so that seems like a shock. But in reality, we just have normal rates, and hopefully the Fed will keep rates in this area. We don't see 1%, 0% rates again, because that's when you see inflation go nuts and everything goes crazy. I hope we don't get back there again, because that's not sustainable. But that's where we've been for a while. So the question is, how these companies that have been growing so much, like a Tesla, how are they going to do with a normal rate environment? That's to be seen. We'll have to see. When it comes to valuation, you have to determine how you value this company. Because if you say Tesla is just a car company, and I'm going to compare it to a Ford or a GM, its valuation is whack. But if you realize or say, I think Tesla's a technology company, they have AI, they've got energy, there's multiple pieces of their business that down the road are going to bring a lot of revenue. Similar to how Apple's, they're not just a boring computer company. They came out with the smartphone, they came out with the App Store, they came out with the AirPods, the iPad, all those different products. That's where the valuation is tough. You have to determine what is the valuation you're willing to pay. What do you think of this company? Are they just a car company? Are they just going to do cars and that's the only way they're going to make their money? Then the valuation is going to be different than if you think that the other pieces of their business are really going to be material to their P&L. So I think that's what we're kind of getting to right now is these two cons. The market is saying it's interest rate sensitive. They're not sold that they can continue to grow with a normal interest rate environment. And also they're saying it's just a car company. Let's value it closer to just a car company. So I think that's where the market is changing its perception on Tesla. Now, competition. Will there be competition down the road? Is Ford going to come around and sell a bunch of cars and people say, I'm going to go buy the Ford Lightning over the Cybertruck or whatever that looks like? We'll see. There's a lot of competition out there. There's Rivian, there's Ford. But the Model Y is the best-selling car in the world as of last year. So I think there's going to be other players out there. But similar to, again, I hate to use Apple because you're comparing, Tesla to the best one of the best companies in the world, which it could be. But there was the Nokias, the Motorola's, the LGs, the Samsungs, the Google. When it comes to cell phones, and Apple still just eats everyone's lunch. So we'll see if the competition can catch up. But I do think that Tesla has wedged themselves in where they're going to be there, no matter what, the dominant force for a long, long time when it comes to cars. And then the thesis is that these other pieces of the business will transition them to be a big, ginormous company similar to Apple. So, with that being said, I got one thing I wanted to pull up because the market did not like these earnings. And they did miss. And again, we've got those cons that we need to face. But if we look at their revenue growth over the year, because if you turn on the news, the headlines were Tesla growth slowing, they don't give guidance, Elon's worried about China competition and all these things. They made it seem really bad. And then you look and say, oh, the Model Y is the best-selling car in the world. Their revenue increased 20% year over year. Their margin did drop, but their margin dropped slightly, but also their cost of goods went down. So they cut their costs and then passed that on to the consumer, so the margin shrank less than it could have. So the revenue growth over the years, you can see here, is just really good. Now, do we go from 102 to 150 billion? That would be surprising. But maybe next year we have a flat year and it's 110 billion. It's not the end of the world in my opinion. There was another thing I wanted to pull up. This was the income statement here. So this is last quarter. Let me move my head so you can see. Now this is where the argument that it's just a car company, right? Because you can see most of their revenue, here we go, most of their revenue is 20 billion of just cars. Another 5 billion is all this other miscellaneous stuff. We need to see these other miscellaneous things grow, the services, the insurance, the energy, the solar, the batteries. We need to see those things continue to grow drastically. This is just a great little snapshot here. This is why you would value it just as a car company, because right now they are just a car company. But they have planted the seeds for other avenues down the road. And also, they're funding those other businesses with the profits from the cars. It's going to be real hard for these other companies to come around and say, we're going to do solar, we're going to do battery storage on a large scale, we're going to make electric semi-trucks, we're going to make, whatever it is. For those other car companies to do that, a lot of those other car companies aren't profitable. So even though Tesla's margin is shrinking, they still have the best margin of all the car companies. So again, to me, this reinforces the negative and the positive. The negative that they're just a car company, but the positive that they're profitable and they can fund their other businesses down the road. Tesla also has 21 billion in cash and a little debt. So their balance sheet is good. They're not going to go bankrupt anytime soon. It's going to take a lot of pain for them to go bankrupt, and they can pull a lot of levers before then. So let's talk about the price, and I'll talk about what I'm personally doing. Now, another thing that wouldn't surprise me here is Wall Street is seeing this as a dead money stock, which it very well could be for the next year or 2 years. Dead money, meaning we're not going to see 250, 260, 280, 300. We may not see those anytime soon. And that's fine with me. To me, this is a long-term play. So if I could have a few years to accumulate, that's great. But you can see we've been chopping around in this little channel here. Chopping. And the market, or the charts, they're fractal. So there's a inception here. There's a channel within a channel. So if we zoom out more, this is where things could get a little scary. We've just been chopping around in this channel. It wouldn't surprise me if sentiment continues to get poor on Tesla, and over the next year or so, we get down at the bottom of this larger channel like we saw back here. Now this was a little bit of a different story because this was Elon dumping a ton of shares to buy Twitter. So he was selling a lot of stock, which the market couldn't absorb all the selling pressure. So the price just plummeted, and then we quickly rebounded out of that. And now we've been just fizzling out here. So I drew this little blue line. This would be my hope of what happens, but I'm fully prepared for us to come all the way down to the bottom of this channel. So with that being said, my personal account, I haven't bought any more. For some of my other accounts, I did buy a little bit because I wanted to get to the round lot of 100 shares. And when we get a nice green day, I will start selling calls to protect my shares to gain some income. I just don't see this bouncing back anytime soon. Maybe it will. But I'm holding and I'm hedging my position with covered calls. The premiums aren't that great right now. To me, this is a great price, 180 long term. Tesla is a $580 billion company. I have no doubt that within 5 to 10 years, it'll be $1 trillion company once again. It just may take some time. Now, will that be next year, 2 years, 3 years? I have no clue. So I'm a buyer here, but I'm nibbling because it wouldn't surprise me, like I said, if we get some great opportunities. The other part I wanted to talk about is it looks, and I've talked about this in my other video, it seems like now is the time to be cautious in the market because you've got Tesla coming out. They're not giving guidance because they see uncertainty. You had Intel come out. not giving guidance, or they gave poor guidance. So far from the earnings that I've seen, hasn't been that like cheery, hey, we're blasting off to the moon. And the market is at all-time highs. So if the market does get a pullback, I mean, here's the triple Qs. If the market does pull back, the sellers aren't going to say, well, hold on to Tesla. They're going to sell everything. So if the market does get a 5, 10, 15% pullback like we saw over here in October, Tesla's going to get whacked just like everything else. So that's where it wouldn't surprise me if we really get some selling pressure. Because if the market's down 20%, Tesla's a high beta stock, so it moves more than the market. So Tesla may be down another 30, 40%. Maybe. I'm not saying that's a promise. I'm not a financial advisor. Do your own research, do your own homework. But I do see a case for much lower prices here, or I see a case for it just not doing much. So that's where, again, this little blue line, I don't expect a whole lot of sharp movements back to the upside. So who knows? So that's all I really got. I hope this helps. Still, I have the most conviction in this name, but I do see what the market's seeing, and it makes sense why this could be some dead money. The market is very short term. There's a lot of managers that need to show performance in the next quarter, this year. And Tesla may not be the stock to return a lot of alpha this year, may not have a lot of gains this year. But for me, this is a long-term hold. This is an opportunity for me to accumulate, but I do think you can be patient here. So I hope that helps. Long video, a lot of me jabbling on here, but it's time to go get some more sunshine and enjoy the football games. Let's go Ravens, even though I'm a Seahawks fan. But hey, best of luck to your teams. Have fun watching. That's all I got. Peace out.